Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of natural gas. And here I am doing my weekly updates not only on natural gas, but also on 2x leverage natural gas, ticker symbol BOIL, as well as United States natural gas, ticker symbol UNG. But first, I'm going to go over the natural gas chart here and then relate the levels that I see here to the other two charts. And I should note that there are timestamps below if you do want to skip ahead to the other tickers, but I do think all of this information is valuable and relatable to the other tickers, so I do recommend sticking around for the whole video. But so here, looking at the natural gas chart, I do have this Fibonacci retracement that I went over in last week's video. I will update it in just a second to include the recent high that was hit on February 29th at a price of $1.93.9. But before I do that, I do think there are some levels here that are good to go over relating to the current price. Specifically, the high that this retracement is based on was hit on February 21st, and that is at a price of, let's see, $1.86.4, which might stand out to you as also being, let's see, the closing price that was hit on Friday at a price of $1.86.4. So I think it's really interesting that we did close the week at that exact same level. And so looking at the chart, a couple things that stand out as, bearish as well as bullish. The bearish stuff is really that we've seen these three wicks hitting highs, like with the high on the 29th, as I had mentioned, and then also on Wednesday, the 28th, we hit a high of $1.92.6, and then the high on Friday was $1.91.2. So really, those are all now key levels that we want to be closing above. And so that we were not able to get above the closing price on Wednesday, the 28th, at a price of $1.89.4. We really do not only want to be seeing a close above that level, but above these wick highs, because currently it does suggest that there are no buyers above these levels, above $1.93.9. And so we want to see buyers stepping in above $2. We want to reclaim that level again. I do think that it is important to note that we did close, at this previous high. And so that does suggest that while we do have these wicks here, we may very well be forming bullish consolidation or a bull flag before the next leg up. And so the next leg up could bring us to this Fibonacci level here, the 236, at a price of $1.96.15, or potentially at this green dashed line that I have marked here at a price of $2.03.7. So that is something to consider. I also do think that if I adjust the chart here, the next level up is the 382 at a price of $2.18.27. So that is something to keep in mind. But also we do have the low that's over here. That was at a price of $2.20.9. So that does correspond nearly with this level here, the yellow one here. So that is something to keep in mind, that we might be going higher, even though, these two red candles and the wicks might suggest or might make it seem like we do have bearish moves moving forward. This may actually be a fake out, and we could see test of these levels over the course of the next week. So that's what I'm leaning towards, but I also do want to be prepared for the downside. And so in order to do that, I am just going to adjust this Fibonacci retracement to be the high at a price of $1.93.9, as I had mentioned. And so from that, we can look at some of these levels that we do see here. So, with that being said, the 236 from this retracement is at a price of $1.85.99. We did close the week at $1.86.4, so we are above that level. I do think that is important. I do think it is good that we closed above not only the previous high here, but also closed above the 236. But if we do continue lower into the week, the next level down is the 382, and that is at a price of $1.81.1. So two levels for us to be paying attention to if we do continue to the downside. We don't want to see closes below either of those levels, and thus far we have not seen any closes below the 236, so I think that's really good. We may continue down to these lower levels, and for myself, I am planning on keeping the brakes on until we see a bottom forming, potentially at the 618, which would be around a price of $1.73.2, or, really worst case scenario, in my hopeful opinion, is the 786 at a price of $1.67.57. And so the reason why I'm putting on the brakes is because I've just seen so much drawdown in natural gas, and I always tend to be early, whether that's buying the dip. There's always a dip within the dip, or selling the top. And so I do think currently this is early before we see a top right around $2, if not higher, around $2.20. So that's what I'm hoping for. But I might be surprised in that we do see a return to these lower levels. And so I don't want to be adding to my position until, there has been a clear drawdown with a bottom formed, because, I do think that could happen. Although, my position is large enough that I'm not concerned if we don't dip to the 618 or the 786. I'm fine to just hold what I have and wait to take profits at higher levels. And since I am talking about what I am planning on doing, I'm going to switch over to ticker symbol UNG, because this is the one that I am holding and that I am trading. And so for UNG, it did close on Friday at a price of $16.42, being down just under 1% on the day, but continuing down in the after hours. And then over the course of the week, let's see, the price went up by almost 8%. So I do think that looks pretty good. But we have seen this pullback, also hitting the high on February 29th at a price of $17.14. We did, however, unfortunately, close the week below the 236, which is at a price of $16.53, so being just below that. But we are currently above the 382 at a price of $16.15, so hopefully that will hold as support. If it does not, the 50% retracement would be at a price of $15.85, but I don't really plan on looking at it with a consideration of adding more until we get to the 618 at a price of $15.55. But really, I would not really seriously consider adding until we got back to the 786 at a price of $15.11, just because I'm trying to be conservative and not wanting to buy a dip until it has clearly been found. And so that is what I am planning on doing with UNG, basically waiting, as I do think we will find a bottom if we have not already found one at the 382 at 1615. And I do think we will be eclipsing 1714 over the course of the upcoming week, potentially returning to the 236 from this retracement at a price of $17.61, or really this yellow line at a price of $18, which does correspond with the low that was hit on December 12th. So I do think $18 could be in the near future, or potentially $19.50 like at the 382 from this retracement, or definitely $20 a share, just that being a psychological level corresponding with the gap over here and some consolidation around that level that we had previously seen. So, I am looking to start trimming my position around $18 a share, then getting up to $19.50 and $20 a share. I am not too hopeful that price will be getting back to 2102 like at the 50% retracement here, but I just want to be conservative with my position, so I may hold on to a few shares for this level, or potentially the 618. I am really just looking forward to $20 a share, but I would settle for 18, so I'm looking for us bumping into resistance around there. But then now switching over to BOIL, ticker symbol BOIL, which is 2x leveraged natural gas. Here, looking at the chart, it does look like we closed the week on Friday at a price of $16.73. being down just about 1.5% on the day, but going to a little over 2% total, including after hours trading. And, over the course of the week, we did, let's see, go up about 13.5%. But looking on the daily, we do see that the past 3 days, we did get kind of a pullback from the high that was hit on the 28th, which was at a price of $18.37. And interestingly, UNG and natural gas hit their highs on the 29th. So I do find it surprising that Boyle, differed in that sense. Also, Boyle looks like it's putting in this inverted hammer candle, being closer to the 382 than UNG. So I do find that interesting. And also, with this being an inverted hammer candle, it is quite possible we do see a reversal into the start of the upcoming week. But levels to be paying attention to regarding this retracement here. The 236 is at a price of $17.21. So we do want to be reclaiming that. And hopefully we are able to hold support at the 382 at a price of $16.49. Below that, the 50% retracement is at $15.91. But then below that is the 618, and that is at a price of $15.33. But really, the 786 is at a price of $14.50. And it does look like right around that level, we got this gap up that was filled more or less, but with the closing price on the 16th at a price of $14.31. We really haven't revisited that level to more properly fill that gap. So I do think that is something to be considering, but also I think it's important to consider how volatile Boyle is because of the 2x leverage, that it may very well be returning to the all-time lows here at $13.45. So do keep that in mind. Also, do want to point out that just below that level, the 1618 extension from this retracement is at a price of $13.40. So we almost hit that level on the way down. It is possible that we do revisit it, or potentially the extension here from this retracement that is at a price of $10.41. I don't think we're going that low just yet, but it is quite possible. So do trade, especially Boyle, with caution because of that 2x leverage. And so some levels to the upside, I believe I've gone over them before. One would be the 236 from this retracement that is at a price of $19.88, just below the psychological level of $20 a share. And then above that, we do have kind of this confluence between the 382 and the bottom here that was at $23.83, with the 382 being at $23.86. So just below $24 a share. It does look like we have a good amount of consolidation there, as well as, the bottom here. So I do think we could start to see resistance when we get to the bottoms of this consolidation. That would be right around $22, getting into that range. And then it's actually possible that $24 could serve as support if we get above those highs, and they would then be acting as support before continuing higher, potentially to $29.46, where this gap was with this blue line here. But, again, of course, I do think Boyle is really risky because of that leverage and just, the nature of the widowmaker, which is natural gas. But I do think that we could be seeing a bull flag here, bullish consolidation before continuation higher, like to test and reclaim $2 a share. So that is what I am looking forward to. That is what I am hoping for. But it is quite possible we do retrace to some of these levels to the downside. So I do think it is good to have that in your plan in case we don't continue higher and we do return to these lower levels. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this and weekly coverage of natural gas. Thanks a lot for watching.